So I guess I got to share screen.
Hey, John,
Yes.
since you switched to this platform, are you going to record the meeting still?
Yes. In fact, can you see my screen now?
Yes.
Okay,
Yep,
and
it's
I
okay.
am recording.
Thanks.
So we should be good to go. All right, so yeah, welcome everybody to the 23 February 2022 meeting. Looks like we got close to our normal numbers here. So like I said, I think some people are probably listening to Crata and they'll catch this meeting later. And yeah, thanks everyone for trying out the Google Meet. I hope this goes smoothly. It seems to be working well so far. I can see everyone very clearly and hear everyone very clearly. And yeah, feel free to poke around the platform. If you see anything on here that you think might be useful for us, please definitely let me know. Normal disclaimer. Let's bring up the dashboard for a second. Let's check out next week. I've not looked at it myself. Hey, where'd it go? What? Where did my webpage go? That's the Zoom. That's that. Hold on one second, guys. Oh. I see what's happening. Okay. John can't use the internet. Let's check out the dashboard here. Oh my gosh, we're getting toward the end of February here. Short month, of course, right? So it looks like Monday we have Crata, and that's a bit of a time change then because she's doing a 5 p.m. on Monday, so we'll have to make note of that. She is usually broadcasting from Spain or Ireland, I think Spain, but either way, it's late, like Micah, for her, so she goes a bit earlier. And then Tuesday we'll be back to 5 o'clock for the trade book meeting, but we do have Thor also on Tuesday at 7 o'clock. So busy week and some time changes there. So the normal Monday webinar goes off 2 hours earlier at 5 p.m. Eastern, and then the trade book meetings at the same time, and then Thor will be doing his advanced volume price analysis class at 7. All right. No change to the roadmap here, and again, this is a very loose description of how you might be experiencing boot camp. It's kind of trying to generalize everybody, so everyone's really at slightly different places along the way. But didn't check off improve trade book, but that's not to say you couldn't be improving your trade book at this point. Obviously, we're all improving it by turning in. You know, a lot of people are turning in their homework to Susan every week and getting some feedback. So that's ongoing. I think the idea of improved trade book was kind of like once you get some a good amount of trades under your belt, you know, how you go back and start to make some somewhat not major, but start to adjust your strategy to try to achieve a better outcome. But we'll be leaving the build phase soon, moving strictly into practice here. You know, where we'll kind of be in our steady state of trading before we hit the later stages of boot camp, where we want to kind of package everything up with a nice bow before we're done with this. So I missed the meeting, as I always do. I'm always in the Verbal Traders room. So, Dima, did you guys talk surviving losses? Was that the bit of the theme this morning?
Yeah, I talked about my longest losing streak, and Eamon talked about risk controls and focusing on the process.
Okay, cool. Yeah, so I wanted to talk a little bit about this from my perspective, and Dima's has a bit more to say. And then, honestly, I want to open up this meeting to any Q&A, you know, any things you guys would like to discuss. And in lieu of some kind of like homework assignment or group participation event, I thought we'd take a break on that this week. You know, it's a shorter week, and I didn't want to bother anyone on Monday, but then give someone a short assignment again. Yeah, I've done that twice lately, so I thought maybe we just stick to some Q&A and talk to each other today. Because there's a lot to talk about. The markets are very interesting right now, for sure. But the way I view losses, they're completely normal. So you got to accept them. They're part of trading. And they come in different they come in waves sometimes, or batches. You should expect them, embrace them, especially if you're taking them in a responsible way. It's part of the process. But even bad losses are normal, and over time, the goal is I call those like the demon-driven losses. Everyone's got I call them trading demons. The things that eat away at your discipline, and people have different versions of theirs. Like my biggest demon is probably really strictly obeying my stops. I tend to let them go a bit long sometimes, or even occasionally get into a trade where I just let something slip too long because other variables look too good, and I'm like, I know the stock will come back, and then it leads to a loss that never should have happened. But other people have losses or demons on the other side. They don't take enough. They don't let their winners run far enough, which you might say, well, that's not a loss. That's just me not taking as big a wins as I can. But the problem with that is they don't overcome your losses in the long term, which leads to longer term losses because you're taking shorter term small gains that you should be letting run further. But my point here is that whatever the demon is for you, over time, that it should happen less frequently and the impact of them should be smaller. That's the goal. And don't doubt that if you stick with trading, you're going to get somewhere quite far down the road. You can be a very experienced trader with years under your belt and still really do something stupid. It's just the hope is that, and what should be happening is you recognize it because you have experience. You're like, this dumb thing I'm about to do with Facebook feels a lot like that dumb thing I did back in the day with NVIDIA. And I really didn't like that thing to happen with NVIDIA because, I was that loss is so bad that it took me a month to recover from, of getting back to disciplined trading. You'll start to remember the ones that really stung you. And when you start to go down the path of a demon-driven loss, you'll recognize it a bit up front and know that it's coming. So hopefully that's the outcome. That's how it's been with me. I have enough dumb decisions and mistakes under my belt that my brain references them. It remembers the feeling, sees them coming. Thanks, Dima. But they're not always demon-driven losses. They're not you being stupid or greedy. Losses can come from normal, stop obeying losses. Like you are obeying your stops, but you are losing over time anyway, or you're losing in a period of time. And that's, again, not to sound too repetitive, but that's why we try to gather information over time, some data, so that we know what elements of our trade book are helping a trade work out long term over time, over a large sample set, and what things are perhaps not helping it work out. And those are the adjustments you make to your trade book. So obviously we're going to have these as well. It's just hopefully these are the kinds of losses you're taking, because this is an attitude adjustment up here, and this is usually more of a trade book or a technical adjustment. There could be psychological elements in here that you're adjusting as well in your trade book. Of course, you guys know your trade books have the whole psychology section, but this is the real mind kicker up here, where you got to fix yourself, and this is fixing the technical side of things usually, mostly perhaps. But it's good to ask yourself, are losses happening outside the norm? Outside normal boundaries, and that's hard to say. The one thing you don't want to do is overreact too quickly to a losing streak, especially when you have yourself established and you have a strategy you like, and all right, this works for me in the long term. This produces an average positive result. This is good for me, but somewhere along the line, you're going to hit a losing streak. It's like any, I use baseball a lot as an analogy. I know some people in here aren't hip on baseball maybe, but you probably know the batter gets up to hit the ball. Those guys they're very streaky players. Baseball players go into periods of can't hit. you know, and everyone knows it. All the fans know it. Basketball is very similar. Basketball is a very streaky sport, especially within the game. You get hot and you get cold. So it's kind of hard to figure out, you know, is there something really wrong, or are you the victim of probability? So, you know, you can actually calculate. I mean, I don't know if this is the right way to go, but if you know kind of what your win rate is, or, you know, what percentage of time you have a green trade versus a red trade, you can kind of figure out if you had like 6 losing trades in a row, you can actually calculate the probability of that happening. It might give you some insight into whether or not that's unusual. I'm not sure that's the exact way to go about it. I don't think trading can usually be evaluated in such strict mathematical terms, but you got to get a feel for what is like a bad losing streak for you. For me, I tend to measure it in terms of days, not trades necessarily, because days I get to reset. I can have a bad day for sure where I'm just not trading well, and I think, you know, I'm trading too fast, and I can kind of feel like this indiscipline where, you know, like I'm not waiting for good setups, and for whatever reason something happened in the morning that got inside my head. A bunch of people were green, everyone seemed to be having an easy day, and maybe I was trying to just get there and I couldn't make it happen. Those indisciplined days happen, but at the end of those I get to, you know, stop trading, eat dinner, work out, watch a movie, go to sleep, and then I, you know, pretty much mentally reset by the next day. So that's why I tend to evaluate myself over days. You know, one day is going to happen, a bad day is going to happen, 2 in a row for sure. But when I start to get to 3 or 4, then I really have to do some self-examination of, all right, what's going on here? You know, has the environment changed, for example? Obviously, lately, the environment, we are in a bearish period right now. I guess we're officially in a bear market. Is that right? I don't know like the exact definition of a bear market, but it's not feeling too hot. I know we're now down about 60 points on the SPY off of all-time highs. So I think percentage-wise, it definitely fits the definition of a bear market, but I think there's a time element to that as well. But yeah, I know the environment's changed for me. It's harder to be a profitable high day break trader in this environment. Not so much because there's less good setups, but it's the issue of forcing it, I guess. Yeah, I mean, there are less good setups because literally the market is going down instead of up. So like if we had a day opposite of today, obviously a lot of stocks would continually be breaking their high of day. So yeah, there are for sure less good setups. But still, in that early morning volatility, before the market decides it's going to have a big sell-off day like it did today, you know, there are reasonable setups. It's about not panicking and kind of understanding what the environment is offering me. I guess what I'm saying is I kind of had a feeling today was going to sell off again. I didn't really believe the gap up, not with all the news that's going on. So in my mind, I might think like, you've got about 15 minutes to make this into a good day, and then the market's going to sell off. I can't think that way. I have to get that out of my system and say, I know the environment's changed, and it may be that I have 15 or 20 minutes of opportunity, but I still have to take trade book setups in that time. I can't take C- setups because, all right, the hell with it. It's breaking its high of day, you know, or it's approaching it. I only have 15 minutes. I have to make the money now, so I'm going to take C- setups. I still have to wait for decent setups in order to try to get what I can out of the day. Another question I might ask is, have you changed? Mike, Creta, people like that are a lot better at talking about this stuff than I am. But, you know, we do get into periods of there's other things going on in our lives. You know, being stressed out by something else in your life, especially if it's money related, you know, never helps. But it's good to be able to do a self-assessment of yourself and like, am I in a good frame of mind to actually be trading and to try to do my best. And of course, somebody asked me this today. Someone from the last boot camp wrote to me, DM'd me in the Bearable Traders chat room, and said, I forget the 3 things he said. Actually, let me see if I can find it real quick. I won't share his name. He said, hold on. He said, "Hi, John, would you help me with a question? What would you do if in sim you are profitable, in sim you do not feel anxiety because the trade is returned, pullback, and you wait patiently for it to resume its trend. In sim, you wait until the price reaches the goal you define to obtain profit or partials." And then he said, "But when I go live, I can't do any of these 3." So this is a really good guy. He's in the last boot camp, and it was hard, to read that because I know how well he was doing toward the end of boot camp, and I think he was ready to try some live trading for sure. But my answer was, I guess, go back to sim, because you just listed 3 things that you can do well in sim that are all elements of good trading, profitable trading. But then in live, what he's literally saying, I can't accomplish any of these 3 things in live trading. And I asked him if he was trading big size or small size, and he said small. And so I was kind of tempted to say, well, I mean, depending how small, I think he's trading $10 risk per trade, and if he has a decent size account, he's probably not putting himself in too much harm. So part of me wanted to say, well, you might just stick it out. But the way he phrased it was like, I can do everything right in sim, and I can't do anything right live. My suggestion was, why don't you go back to sim and see if you can get back there? Because if you were right about that, if you can put aside whatever is bothering you about trading live money and go back to sim, if you can make those 3 things kind of work out again in a reasonable amount of time in a proper environment, then kind of get your head right and come back to the live trading. But it's always okay to go back to sim. I've gone back to sim during my last couple of years of trading, not for a long time, but I've gone back for a few days when the market was changing and I was kind of losing confidence in myself, and I've done that. I have, especially to get better at it, especially when again, not to repeat myself too much, but a key element of my trading is to get out near break even a lot and not take full losses. And I've gotten into periods where I've been less disciplined about taking getting out near those break even entries. And I feel myself kind of like, come on, buck and trade, work. You know what I mean? Like I'm going to let this thing go a little bit further. And what it's doing, it's pulling me out of my trade book, where I should be exiting these trades where I know I should be when they're not working out quickly. It's kind of times like that when I feel the discipline of my trade book shifting over to a little bit of hope and profanity. And those are good times to take a day off, a couple days off maybe, and go back to sim. And then, because in sim I can always be disciplined. There's no reason not to be, and kind of get the head back straight. And then you can always take a break from trading as well. The market is always going to be here, except on President's Day and other holidays. But it's going to be here. And there's this weird feeling that we all have that we got to be here every day, that you have to get the opportunity every day. And that's... I hate to say it, but I think that some of the gambling nature of trading makes us feel that way. That there is, for every one of us, there's a small percentage of gambler, and for some it's higher than others. But I don't care who you are, you kind of want to roll the dice. You want to get in the casino because it's fun. And so it's hard to take a day off sometimes. I felt empty. I don't know if I was talking about this. I think I was talking about this in the Bearable Traders room. I woke up Monday and I completely forgot the market was closed. And I just felt weird. I was like, oh my God, I was all mentally ready. I had, walked the dog, had a little breakfast, and ready to get at it. And my wife was like, "What are you gonna do today?" And I was like, "Oh my gosh, the market's closed, right?" And like, I had this very strange feeling of what am I gonna do today? Like, I mean, it's nice to have a day off. And my head kind of finally came around to that thinking, but I was very taken aback by the feeling I had, especially because I thought I like most market holidays I remember, and I totally forgot this one. So my whole body and brain was ready to get trading, that excitement, a bit of dopamine probably for the market open, and I realized like I was going to be doing something completely different that day. But it felt good, I guess is what I'm trying to say. By the end of the day, it was like really nice to have a day off. And it's nice to have a short week anyway. Well, Russia's trying to invade Ukraine. Might as well have a day off. couldn't be a better week. In fact, it'd be nice if the market would just close tomorrow and we could all start again Monday. Might be better for everyone. But never think you can't take a break. The market will be there. What happens to your account when you take a break from trading? This is like one of my favorite things to say. Like, you don't lose any money. Your money just sits there nice and safe. One of the nice things about day trading is you could take this week off. I mean, some people it might be a really good idea. Like, I feel a need to trade being someone, I work for PCT and Andrew on the BBT side. I will try to trade. But, I mean, technically the smart thing for me might be to just take the week off, and let my money not change at all. And while everyone else's retirement account goes down and, everyone else is losing money in unrealized gains, as a day trader, you can be happy knowing you have this money that just sits there and it doesn't have to change unless you want it to change. You can always step away. So anyway, those are some of my thoughts on surviving losses. I know some people are probably in surviving loss mode right now. We have some people still, trying to find their bottom and turn their equity curve around. I'm happy to see there are definitely some people finding that bottom, which is a good thing. And, I'm not saying people have completely turned around some of their performance that I know they want to get back, but you can kind of see some of the curves finding a bit of volume. People probably scaling back their risk a little bit and being a little more careful as they try to develop their trade book and move forward. And I've seen some really great equity curves as well. I mean, this is actually probably some of the better ones I've seen in any boot camp, I'd say. So which is a really good thing because, again, it feels like a tricky environment for me, but it doesn't mean it's a tricky environment for other people, and some people are definitely finding their way through this market nicely. All right, Dima.
Thanks, John. So this morning I was talking about my losing streak when my first year, and Eamon was talking about the risk controls and all that. So there's just a couple more things I wanted to add. And first one here, we talked about all morning, focusing on the process, not the outcome, what you can control. We covered that this morning if you were at the meeting. I just know that when I focus on the P&L, I lose every time. Every time. I don't even get random, breaks here and there. So for me, it's the fear and the greed. So it is very difficult to control that or even manage it to this day. So I'm not saying, have control over that. I'm saying in a losing streak, try to distract yourself, which is the next point in my slide. Constant improvement because markets are dynamic. So I found myself being really busy on all these different trackers that I shared with you all. Every week I shared different spreadsheets and different tracker that I did between journaling. And in the beginning, I had so many of them. I spent 2 hours of just tracking and journaling. And it was really a good thing. There are things I stopped doing because they didn't, the information wasn't important. So for example, the sample set that we do for different things, it has 20 counts, 20 trades. To John's point earlier, he was talking about, did you change or did the environment change? I find those sample sets are so good for me because 20 trades is not that much. If you trade 10 trades a day, that's 2 days. And if you trade 5 trades a day, that's less than a week still. So on average, so when you have these 20 count sample sets every time, when it changes, you're able to catch the change. Like if the environment has changed or if you change, like how do you know that happened? So I find when I track between sample set to sample set, so for example, I have 2 sample sets long time ago that it went from 60% to 40%. That's a 20% drop. To me, that was very big. That's when I go back and check, what was it? Is it me or is it the markets? In that case, it was both. The markets was crashing and I'm trying to go long because I'm more comfortable with long trades. But I find when you do this and when you track and you're trying to find the patterns of the different things, whatever is working, you keep. Whatever is not working, you fix or you remove. In different things, different indicators, different charts. And it keeps things objective because losing is so emotional and it's so, if you're like me, you take it personally. I'm failing. It's not the trade that failed. I'm failing. I'm a terrible person. What's wrong? I do well in life. Why can't I do this? So you get into this terrible cycle of criticizing yourself. So when you distract yourself from that and keep all these different tracks, it keeps it objective. The next point is so important, is to track positive progress as well. If you were at the meeting this morning, that's sort of what kept me going. I was losing every month, but I was losing less and less. So that was a positive thing for me. When I was if I had a red day, then I look at the week. If I had a red week, I'm looking at the month, or a quarter. I am just trying to find different things that were positive. I was losing, but I was having more green trades every month. So to me, that was such a positive progress. It's just a matter of tweaking. I know this is a hard thing to do, but you focus on that. I even have in my booklet, my Excel booklet, I have one section about positive things. Every day I have to find something that I did well today, even if it was a terrible day. In the beginning, I was really good at stop losses, that not removing them. So no matter how bad the day was, I always had that working for me, that at least I got stopped out and didn't lose more than I have to. So I just found that was so helpful when I was like, oh, when am I going to get better at this? And then the thing that really helped me too, I never did mindfulness or, self-reflect. Well, self-reflection I've done, but definitely not meditation or mindfulness. I started with the trading, and I just find, if you're into it, has a very calming effect, and it just seems to organize the thoughts. I meditate before the market starts, and even though my mind is going like I'm ready, because I already did my prep work and I'm excited and I want to see what's going to happen. So I find it more challenging to meditate before the market opens than if I do it after, but it just still gives me a little bit of, organizes my thoughts. And self-reflection is so important. You have to be able to do this because John says 80% of trading is mental. So, it's all about the way you feel and the way you think. So you have to be able to reflect. Part of the reflection I do is I know I don't have money issues, but I have success issues. To me, every trade is success. Sorry, green trade is success and every red trade is a failure. It's literally that black and white. And logically, I know that's not the case, but that is what happens. And that is the cause when sometimes I don't accept losses and I overtrade or whatever. So it's just really important to be able to do that and be aware of it. You're not going to be able to fix it as soon as you figure it out, but being aware of it, the back of your mind. And finally, and most importantly, this is what we always wanted to do. So if we can, let's enjoy this process, right? Enjoy it, work hard, and be proud of yourself. I know almost all of you, the decision to decide to trade took you a very long time. So it's something we all love and we're passionate about. Otherwise, we would not put up with the market abuses. So remember, this is what you always wanted to do when you're in the darkness and in the abyss. And be proud of yourself for deciding to do something you really want and something that's really hard. So I just find when sometimes I'm not happy about things is that I forget to be appreciative and grateful that I am doing exactly what I always wanted to do. So just put that somewhere on a sticky note to remind you at the lowest point that is your passion, and it gets better from here.
Yeah, I like that last one, Dima. It's very true.
That's it for me, John.
Oops, am I on mute? I'm on mute. Yeah, I like that last bullet, Dima. It's really important to remember that, and the more responsible you can be, the more you can keep yourself in the game, so that you can complete the journey to figuring out how to be a profitable trader. And just remember, I always throw it out there. I know I'm looking at 22 other people here, and among you, some of you have amazing things you can do. I'm always kind of blown away by some of the members we have in Bearable Traders and P Capital Trading, some of the hobbies people have, and the things they've accomplished in their life and who they are. Like we had Kim, who was the 747 captain. I mean, amazing. I think it's the coolest thing. But imagine how long it took her to do that thing that she always wanted to do, years. And I know, Dwayne, you're a scuba diver, right? Yeah. I mean, I'm sure the first time you went scuba diving didn't take long when someone, strapped a tank on your back and told you to put your head under the water. But Dwayne's a really good scuba diver. Like, he's very professional. And there's years of experience to get good at what he wanted to do and what he wanted to be good at. It just, everything takes time. And there's for some reason, there's a feeling that I think it's a lot of the way day trading is packaged and marketed sometimes, that this is a rather quick road to changing your life and to changing the way you produce income for yourself. It's just not true. It has to take time. Everything takes time. So just remember that. Think of this as a journey. If you're new to trading here with us at PCT, then I think you've started your journey in a very responsible, intelligent way that will hopefully cut down on the length of time it takes you to get there. Or if you are a more experienced trader and you came here for a little bit of a tune-up and a different kind of experience, then kudos to you. I think the boot camp can be a great mental reset and just a good place to focus and learn from others and just perhaps dial up some of the self-discipline, whatever you're using it for. But it can be part of the experienced journey or the inexperienced journey, but hopefully helpful in either case. And I wish I could do that meditation thing, Dima. I can't.
You can start with 1 minute.
I guess maybe that's the way. Those paintings or pictures that you stare at and you stare long enough and it turns into a sailboat? I've never, ever, ever been able to make one of those work. I can't do it. Like, my mind talks me out of it, Like as I stare, my mind is saying things like, you're staring at dots, it's not going to work, it's not going to work. And I think if I tried to meditate, my brain would immediately start saying things like, you're meditating. I don't know.
I started with guided meditation. I found that was very helpful. And if I tried different things, and I definitely liked different voices, and I was able to follow through with them. And that helped. And after that I did, guided meditation in the afternoon and 5-minute meditation by myself in the morning. You just try different things.
It could be something waiting for me. I'm just, maybe maybe the guided stuff is the way to go.
I don't think it's the solution is meditation. I think anything that quietens your mind is good enough. So you might have a different thing that helps you relax.
Yeah. Well, actually, every morning before I trade, I take my dog for a walk, and it takes about 25 minutes. And I listen to a podcast, and honestly, I'm usually half listening to the podcast and just kind of thinking about other things. I'll notice, I've been walking for 5 minutes and haven't heard anything the podcaster said. But yeah, that's good just to get some fresh air. I do get out every morning, and that's a nice. It's calming mentally for sure, as long as my dog doesn't get into a fight with another dog and everything stays cool. Thanks, Demo. Appreciate it. So other than that, I just want to open up the floor. So Dima and I will stop yapping. But how are you guys doing? How's trading going? How's your experience?
Can you hear me, John?
Yes.
Yeah. I had actually a great weekend because I've decided, I think it was last Friday, I had my Hulk day that really just kind of pissed me off to no end. And so I spent the entire weekend redoing my entire trade book, and I dumped the ORB, and I'm sticking with the ABCD, but I put a lot more restrictions on it. And I'm also incorporating a lot of Thor's pivot levels. And Tuesday I had an awesome day. I mean, it was just easy. For the first time, it was just easy. I wasn't worried, crossing my fingers it would work. It just worked. And today it would have done the same thing, but I have a technical question. I use the 1 to 3 RR hotkey. And what DOS does, it sets up your in and your out, your stop and your profit. And I got in a trade, I did fine, but I took out on my own, and I forgot that was there, that the stops were there. And I was on SPY, looking at SPY, and all of a sudden I'm negative $250 in my account. And I was able to fight my way back to a green day, but that's the second time that's happened. Is there a way to if you stop a trade, to get that to automatically come out? Or, I mean, I know I hit cancel order usually after a trade to make sure no other pending orders are in there for that. But is there a hotkey that you can say, look, if I say to take profit on a trade, it'll take all canceled order or all other orders off the book?
Yes. I mean, I think there's a way to do that. But you're saying you're using the one cancels the other hotkey. Well, you're using a 1 to 3, right?
Yeah.
And that's a one cancels the other setup, right? So if one trips, the other one cancels out, right?
I believe so. I mean, I usually don't let it to get to my stop, and I usually don't let it get to my profit either. I'm usually kind of controlling it in between. That's why I like the 3R, because I can let it float in between.
Right.
So to be honest, I don't know. I mean, it triggered an order while I wasn't even looking at it.
It should be set up to one cancels the other. That's a typical.
It does, yeah.
Type. Yeah. So but always testing sim trace. That's the thing you kind of want to know. Since you're using the hotkey, you really want to know exactly how it works. So you might be good to test that just to make sure that's how it's functioning. You can, like I always say, just go buy one share of GE or something, and put a real tight stop. A 1 cent stop and a 3 cent target, and just make sure the thing cancels itself out, and you might lose 70 cents on the trade.
Okay. Yeah.
But if you have that, if you use that hotkey and then you get out of the trade with another hotkey, or your montage, you just sell to get out of position below target, and maybe you say hey, it's good enough. I'm not going to hold for 3R. I believe it'll still keep your original orders in place.
Yeah, and that's the problem. If I forget that that's there,
Yeah.
and I switch to something else, then if that thing hits it, it triggers it, and I don't know it. And, that's the second time it's happened to me. So, I didn't know if there's some sort of automatic way to, or maybe an alert to say, hey, you're still in a trade, or I don't know.
Yes. how well? Say you were going to take money off. Say you were profitable. You use that hotkey, and then you were profitable. Would you use your montage, like just the sell button on there, or what?
Yeah, my buy buttons are hot keys on the Stream Deck, and then the sell buttons are all hot buttons on the screen. I just kind of have them separated that way. I don't accidentally hit the wrong, and go short when I want to go long.
Actually, I don't know how you would do it. I know you could probably throw something in the script for a buy or a sell to say when I buy or sell, like cancel all orders, then buy or sell this. But if you were in 2 trades, I believe it would cancel your other trade too, so that's problematic. Yeah. I don't know. That's a good question for Kyle, though. Kyle, the hotkey man,
right
over on BBT. I don't know if you're a BBT member. Yeah, because I saw you in there today.
Yeah. I'll send him an email.
Send him an email. He's the man. He'll answer you.
Okay.
For sure.
Thank you.
Yeah. You can also attend his tech session on Monday nights. I think that might be an elite member thing. I can't remember, or maybe it's not. I don't know. But yeah, he's the guy who can give you the best answer. But nice to hear you had an easy day Tuesday. Those are always nice when those happen.
Yeah, it was nice. And I mean, technically today I fought my way back out of a hole and into the green. So I was pretty happy about that too. I mean, because, technically I did a good job, even though I had to scalp my way back. It worked. So it's showing I understand the markets a little bit better. And those pivot points are miracles. I really didn't understand them before. And wow, between the pivot points and understanding the L2 and the time and sales, man, I feel like I'm crushing it now. I don't know. I mean, really haven't had that many great days, but I feel like I'm crushing it now. So
yeah, I recommend anybody puts those pivots on their charts. I just continually blown away by how accurate they are in terms of, especially resistance. It seems like, but I tend to watch things going long, so I'm often very sensitive to them resisting off something. But I traded that DKNG today, and it's like just watching it fight R3 almost to the penny, and I was like, you gotta be kidding me. Like, it's a wall, man. Like, it won't go through this thing. But the nice thing about that trade, it sure as shit hit that pivot point. I think it was R3. It might have been R5. I don't know. But it came back down and got the break even. But it reaffirms my understanding that that's a real thing. I didn't lose any money on the trade, but it's just one more data point to let me know that that's the thing I got to look out for sure.
Well, that was the big thing. I noticed I was getting chopped out a lot before in the previous weeks, and I was looking for a way to stop getting chopped out in this market. And with the pivot points, if I just take a trade on an ABCD at the bottom of a pivot point or short it at the top of a pivot point, you can trade in that range and be okay. You just don't trade in the middle of the range with an ABCD, because then you can run that chop. So it seems to work for now anyways.
Nice. Yeah, I noticed Dwayne wrote in the chat, you can add, going back to your technical question, add CXL ALLSM to the beginning of the script, but that will cancel all orders, I believe. So I think it will cancel everything you're in.
Yeah. Well, right now I'm only doing one trade at a time, anyways. So.
Okay.
Yeah.
Just something to think about.
Okay.
But it's good practice to just be cognizant of always checking your windows. It's kind of like driving. I was teaching my son to drive recently, and like, new drivers have no intuition to look in their rearview mirror. Everything's forward when you're teaching someone to drive, which for good reason. They're concerned about what's forward of the car when they're moving forward. But you guys know from being seasoned drivers, like, you have to know what's going on behind you. When you get really good at driving, you can actually drive defensively. When you see some dipshit behind you, be like, I'm going to pull over one lane and let this guy go by or whatever, I hate being tailgated. I can't stand it, so I'm always looking at my rearview mirror and thinking about who's back there. But anyway, my point is, check those windows, those order windows, what's pending. You'll get better at it. I can't tell you how many times, it happened a lot that I ended up short in trades by accident because I forgot to remove my stop when I was learning how to trade. Same problem. But now it's just like looking in a rearview mirror drive. It's such second nature to always be checking the windows. You get out of a trade, I go up to my I forget the name of the window, where your P&L is, and make sure I see a zero. I said I got out. Is it 0 shares next to that thing? especially if I'm in something a bit big. You know, I'm just paranoid about making that mistake. So you'll get better at that over time as well. You just got to get snake bit enough times to to start to make it.
It'll hurt bad enough after a while.
Yeah, I've gotten into some good accidental trades too. That's the funny thing, you know. Um, it's worked out both ways, but I'm pretty sure I lost more money than I made by making those mistakes.
I just added this hotkey script. If you guys are interested, it was shared with me. I haven't used it or tested it, so make sure you test it. But this is a script for partialing for long or short. So you're not making that mistake when you're partialing and you're adding to the position. So it just works as a reverse to whatever direction you're going. And then that way you also save space for the buttons as well. So you just change like the 20%, you just change it to any percentage, but you only need one partial for each, for either directions.
Nice. Thanks, Timo.
Thank you.
So Adam, you got 4 green days in a row after a quote sea of red. Any idea what the change can be attributed to?
Yeah, just a lot more cognizant of levels. I found I was taking trades before that were, maybe too close to the 9 moving average on the 1 minute if I was trying to go short, and it would end up bouncing off of that and then reversing, or again the pivot points, and actually they've always been on my chart, but now actually paying attention to them a little bit more. Which is good too for figuring out risk to reward before I enter the trade. So it's, I'm trading better setups. And then also my journaling is a little bit more intense, so I don't overtrade as much because it's just more journaling I'd have to do. So that was pretty good too. Less homework.
Yeah, I'm a big fan of that. I've got 2 trades to journal tonight, and at least I have that to look forward to. I have 2 trades that didn't work out, but not a lot of work to do tonight, and I am happy about that for sure. So it is a wonderful side effect of more intensive journaling, is you will want to trade less, but you'll want to dig into the ones you took. You really will.
Yeah.
You'll want to wait for better setups. You'll try to work them out, and then you're going to want to dig into why it didn't work. But, just like Adam's saying, you will want to trade less. And
it's definitely a little too loose on the orbs, in the beginning. But, now that I'm paying more attention to levels, they make a lot more sense, and I've been able to catch a lot more green ones. And the ones that are losses are, certainly minimized. So, they're all like, 2.5 to 3 to 1,
Yeah.
for the risk reward, so they've been pretty good.
Actually, a level that I put back in my charts today, I can show you guys, since you're talking about levels. Make sure I don't screw up any windows here. I put this VPOC back in my chart. So recently I took some, am I sharing the screen anymore?
Can't see it, no.
No, sorry. Present. So recently I took 9 and 20 minute moving averages off my charts. I really don't use them for anything. And for a while I had the volume by price. I have 3 trades to journal today. I tried a Rivian reversal. It did not work. I took the volume by price bars off my charts. So if you guys don't know, if you go to study config, there's a study called volume by price. And if you throw it on there, actually, I have to config it to show. Hold on one second. Oops. Oh, it's on here twice. Hold on one second. Remove that config. So I had the transparency set rather high so that they don't show up. But there are these bars here, these green and sort of brownish looking bars. And they show, instead of what down on the bottom for volume, this is volume by time. This is how much volume happens in every 5-minute segment, or down here, volume every daily segment or every 15-minute segment. It's volume measured by time. These bars are volume measured by price. So they go sideways. They don't have numbers you can read. There's no axis where you can read a number. You can only know like relative kind of strength in terms of where the most volume is. They tend to change. In fact, they do change. If we change to a 15-minute chart, depending on where you're viewing, how much you have zoomed in, the line will shift around a little bit. So you can see up here, it's pretty steady for Rivian for the day, but it'll actually move as you zoom in and out. Here now, right now it's at about 57.50, but if I zoom out for the whole day, it's up around 58.30. But what I did today is I thought I don't really use these volume by price bars for anything, but I do kind of like this VPOC line. So what I did is I went into the study config, and I made the transparency on the volume by price bars as high as they can be. So essentially they're invisible. And but I'm also showing the point of control, which is where essentially point of control is where the longest volume by price bar is. So it's the most important volume by price level. But if you zoom out for the whole day, you kind of get a feel for where the most, if you show the entire day's worth of data, or everything from the pre-market to where the day currently is, obviously we can see the whole day now, but you can see the most important price level by volume today was right around the 58.30, 58.25, which is very close to S4, which is 58.21. So it's a really strong level there. But long explanation to say to what Adam was talking about when he's talking about, learning to respect levels. This is one you might want to put on your charts, especially as the day wears on. The volume point of control line, this yellow line, becomes more and more important as the day goes on. And you can see I tried a Rivian reversal here. I tried it off a double bottom on the SPY off of its own, I think it was S6. Yeah. I was trying to time it with this double bottom off the SPY right here. And I did get an okay move. I got about a 70-cent move, but it wasn't enough to take a partial on. But you can see where it rejected off of. Pretty much exactly S4 / the volume point of control. So anyway, food for thought if you're looking for another level to put on your chart.
John, if you use the VPA, the vertical volume bars,
Yeah.
at least that's what I found out. I was reading Anna Coulin's book, and what I found out is that the larger those vertical bars are, the more congestion you see.
Yes.
And those actually are also quite good levels to trade off.
Yes.
If you want to break out or a reversal or something like that.
They are. 100%. Yeah. The only reason I don't like the horizontal volume by price bars is because of the nature of how they change as you zoom in and out.
Yeah, that's true.
Because it's like, how much chart do I want to look at? That's why I prefer to look at the whole day. When you look at the whole day, and it counts the pre-market as well, but the pre-market volume, it tends to be so low that it has almost no effect on the level of the volume point of control. So it's not really a big consideration. But as long as you show some of this morning's pre-market, none of the after hours from the previous day, but zoom in so you're only showing pre-market hours, and then whatever the day has done so far. If you're an hour into the day, then show a little bit of pre-market plus the hour into the day, or a little bit of pre-market into 3 hours into the day, wherever the clock is. It'll show you what the daily volume point of control is, and that's the one that I tend to like to have. Although what I'll tell you is, again, for high day breaks, it's usually not. The volume point of control is probably somewhere in the middle of the daily movement, not near the high and not near the low. It can be, but it tends not to be. So for my strategy, it's not a huge concern. But today, you can see I took 2 high day break trades. Neither of them worked. I waited the entire day and took a swing on a reversal, which almost worked. But in that case, the volume point of control was a good level to have, but it factored in for a different kind of strategy. But most of you were trading something else, so it's something to think about. but yeah, Mike, for sure that, again, we've talked about that book, but it's a good read, right?
Yeah, it's very inspiring. But now I have to see how I can take it into account, and I'm not seeing it all yet. I think I got it, and then I look at the chart and I don't see it, and then I do see it, and then I don't see it. So it's, when I read it, it's logical,
Yeah.
but then I have to see it when it's in action, and I find it still difficult.
It is, because yeah, like we've been saying the whole boot camp, you have to see enough iterations before you believe it. It's because we're dealing in the world of probability. You can see I could show you. It's so hard sometimes, especially when I'm moderating in the chat room and someone points out a high a day, and I look at it and I'm like, yeah, that's got all the elements. Yeah, it's looking good. I love the level. I love what the market's doing. I like the volume. Like, this is a trade. We should take this, and then it doesn't work, and it's like your whole reputation is kind of hinges on one example, and it's like, well, okay, it's not always going to work. So if you could somehow sit down next to somebody and say, hey, let's take 40 high day break trades in a row, and we will develop confidence in this in each other over these 40 iterations that we'll take right in a row, then you'd have a more compelling argument. But yeah, that's the game. Is you can read Anna's book and know exactly what you're looking for, and it's not always going to work out.
No, but it's a good guideline, I think.
For sure, yeah, 100%. It's there's not many books that are solely focused on the idea of volume. How can you think about volume? What does volume mean? Why is it important? It's so important to trading. You got to think of this as, we call it the stock market all the time, but a lot of people can't think of what the environment we're trading in as a true market. Thor's very good at explaining the market as a market, and you got to think of it that way. Yeah. I always try to picture people. I pictured the level 2. I don't know why I've come up with this vision in my head, and stop me if I already explained it, but I've had enough boot camps that I've repeated myself, and I don't know. I picture a tree because I was told when the stock market became the stock market in New York, or in New York back in whenever, they wrote the agreement for the stock market like under a tree or something. Does that ring a bell to anybody? I don't know. Doesn't matter. But I picture a tree where people gather to trade something, not even like a stock, but like an item. And I picture people, like, if you want to make an exchange, if you want to buy or sell, you got to step up to the tree. The people at the tree can make a deal. That's your level 1. That's your buyers with the highest bid, and that's your sellers with the lowest ask. Those are the people who can exchange whatever this thing is that everybody wants. And when you have 3 people at the tree on the buy side, and you have 400 people on the sell side, like, what does that tell you? I mean, what if those people were trading Beanie Babies? I try to think of something stupid like that. Or I don't know if you guys have ever heard of Cabbage Patch Kids, or no, some of you were younger, but that was a ridiculous hot Christmas item when I was a child, and everybody wanted Cabbage Patch Kids, and people would do anything to get them, right? There was a crazy market in Cabbage Patch Kids, and their price got wildly out of control. And you can think of tulip bulbs, or you can think of Beanie Babies, or whatever it is that you want. But I kind of picture those people at that tree. Like, what does it mean to have 400 people trying to sell their Beanie Babies at this price, and 3 people who seem to want the Beanie Baby? What does that mean? And what does it mean when people are not holding off? When they don't want to step up to the tree and they're waiting. They've got their armfuls of their Beanie Babies, and they're waiting for a higher price. And it's kind of like we talk about in the Bearable Trader side a lot. When you see a lot of people on the ask, stacked up in higher and higher prices, what does that mean? The intuitive thing is, it means there's a lot of people that want to sell, and there are. But there's a lot of people being patient, right? They're saying, like, yeah, there's a lot of people at the tree who want to sell, but I'm waiting back. I'm going to step back from the tree 20 feet, and I want to sell too, but I don't want to sell as cheap as that guy. I can wait this out. It shows confidence on the side of the sellers that they might get the price to come up higher. For some people are really smart in real estate. I have a friend I talk about sometimes. He's terrible at trading stocks. he's a master at trading houses. He's made like a lot of money in the real estate market. He completely understands. He doesn't even know how much he knows about bid and ask and things like that in markets and like waiting and what you can get, you know, how you wait out price. It's almost fascinating to watch him because he's so good at that on the real estate side, but so bad on the stock side. So maybe he'll figure it out. What else? Who else is out there? Any other market observations? Anyone having a hard time as this market sells off here?
I am.
Is it Jahara?
Yeah,
Are you trading high day breaks?
I am.
Yeah.
And wondering if I maybe should have picked a different strategy.
Well, it's not. I mean, it's well. The market will probably offer you opportunities coming up here. I mean, it's not going to sell off forever. It's going to hit a pain point where buyers are going to come back in. So I think you'll see more opportunities. I wouldn't switch off of something so fast. But yeah, until this thing sorts itself out a little bit, there might be more pain coming.
Got it. I've actually wondered if I've been too disciplined. Some of the things that we've talked about, and I know like we talked about like the amount of trades people may or may not have taken at this point. I haven't had any of those issues like, you know, jumping into a FOMO trade or someone else goes, oh, like that stock's trading really well and that. So I'm wondering if my sample size is smaller than it should be.
How many trades are you taking a day?
One, maybe two. And I sit here all day.
That's pretty small. I mean, because I'm trading the same thing you are. I'm definitely seeing more opportunity than that. So you may be holding yourself a little bit tight. My camera's going fuzzy. There we go. It's not a bad thing, Jahara. I mean, it's a much better problem to have than the opposite, because I tell you, it's much harder to correct from over trading and not really having discipline in your entries. So it's a hard thing to say, maybe loosen up a little bit, you know, and like allow, because you are in learning mode too, right? So you're going to learn something from every trade and you're not going to lose any money in the process. So I don't know exactly your criteria or what might be restricting you from getting into some more trades, but you might loosen it up a little bit.
Okay.
It takes.
I've even thought about like buying another screen so that I can look at 24 at a time instead of just 12. Because I'm wondering if my sample size is too small, if I'm only looking at too small of a number of stocks and there are other things that are happening outside of those that just aren't in my purview either.
Yeah, 12 I mean, more is better. And you have to learn how to be able to kind of handle that. But I've got 12 on my screen, my primary, and then I have a whole secondary of 15, 16, 17 more. And once the market slows down a bit, the reason I have 12 on one screen is because the market's so volatile in the first, like I don't trade in the first 5 minutes, but between the 5 and maybe 5 minutes after the open and about not even 10, but between 5 and maybe 8 minutes after the open, there's this window, 5 and 10 minutes, where I have a hard time doing much more than watching the 12 because they're very volatile and a lot of them are threatening high of day. But soon after that, there's usually a sell-off, and then, you know, I'll start to go scroll through my secondary and see if there's anything I was missing. Sometimes I missed it. You know, there was something on my secondary, and it just happened in the first couple, you know, the first minutes I was allowed to trade. But I'll scan through my secondary real quick, and now I can't see those on my left monitor. That's where the 12 reside, but my center monitor, where I'm watching you guys right now, that's that screen I was sharing before. I can click through, and I can see what's on my secondary. And then usually after about 15 minutes, I'm setting alerts, you know, like with the hotkey, if you have that, Jahara. Yeah, you do. Yeah, then I'm going in there and quickly setting alerts. And I can do that very quickly. It's all, I mean, we in the Army, we would call it a battle drill. When you had to do something over and over and teach somebody how to do this thing, like we call it a battle drill. And that's my battle drill in the morning. 5 minutes after the market's open, I'm scanning 12, seeing if anything looks good. That's the hardest part of the day for sure. That's the most uncertain about whether I'm making the right decision or not. And then at about 10 minutes after the open, or not even, 5 minutes after the open, a couple minutes watching, nothing's happening. If enough things have pulled back and nothing looks threatening, then I'm going to my secondary, boom, 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 checking those real quick to see if there's anything of interest. And then right after I'm done with the secondary, I'm going to setting alerts. And once I have the alerts set, then it becomes a lot easier.
Got it.
But yeah, it's hard. That's why the benefit of it is that it's an easy to see setup. So when you get better at it, you'd be surprised how many stocks you can get through in the morning.
Okay.
So you have that going for you. But it is a momentum type trade, and so there's lots of missed opportunities. Oh my God, yesterday was terrible. Like it's just the way it is sometimes. I got into Rivian yesterday, and like in the 2 or 3 minutes it took to decide that trade wasn't going to work, and I got out of break even. Like 4 stocks broke, and they all broke like enough that I could have chosen any of them, and I probably would have, and they all ran for like $2. And I was like, that's my whole easy day right there. They all broke and never looked back, and then it was a slog, to wait till 10:30 to find something that thank God worked. I think I got lucky yesterday, but something worked out. But you'll learn something from everything, Jahara. That's another thing to remember. Like whatever you're doing in high day break attempts, if you ultimately decide you'd rather trade something else or maybe drift into your own idea of what you want to do, you are going to learn lessons that are transferable. I guarantee it. And especially like Mike was saying, lessons about volume. Volume tells a similar tale among many different strategies. It totally does. The volume that you use for a reversal, like the way it sets up and why it's good for a reversal, that same volume, when you see it on a high day break, is a danger sign because you're not looking for a reversal, you're looking for continuation. But, so when you see reversal volume on your high day break, you're like, uh-oh, that's not good. I should probably get out of this trade, Yeah. But when you see high day break volume continuing to build volume, on your reversal, then like, oh, okay, it's not reversing, it's continuing. So, long way of saying, this isn't lost education. I guarantee it.
Right.
You'll take along the lessons. But yes, it's been a bit of slim pickings, and I think it's I think there's more pain to come. So we'll see what happens. What you're going to see is every time there's a window where it looks like Putin might be pulling back a bit, the market's going to react very positively. That's what happened this morning. He moved into his 2 new regions, and then there's been a pause. And the whole world's wondering maybe that's all he's going to do. He's going to take these 2 regions, which he kind of already owned in the first place, and maybe that'll be the end of this. And the market gapped up, and then it became evident very clearly as the day went on that there was nothing but more bad news coming out, and he's probably not going to stop there. And then the market took a dive. So we could all wake up tomorrow, and we're going to go through this cycle of like, maybe he will, maybe he won't. But we just have to wait it out. It's opportunity as well. It's just most of us tend to be long bias traders, and a sinking market takes away opportunity from all of us trying to get long, trades to the long side.
Then with that in mind, do some of the same principles that apply for high of day break also apply for a low of day break, or are they very, very, very different animals?
No, they're very, very, very similar, I think. But I'm a guy who preaches data sets and, collecting data. I don't have a data set on low of day break trades. I do have some experience with them. Because obviously when I started this, I'd rather they were both the same and I could trade them both, right? Because that'd be great. But they never felt that way to me. And people are weird. Some people just trade to the long side better, and some people trade to the short side better. Like, I think Peter's a very good trader, but he's clearly a short bias trader. Something in him just sees better short trades. I see better long trades. And so I don't know if the reason I couldn't really get those trades to work out is because of a lack of faith on my part, kind of, you know. Or they'd scare me because I think like it was always a trick. That lower day break was actually a reversal, and I think in my mind I felt more like that. But what I will tell you, my suspicion, and I think Mike saw the same kind of thing, you know, in the past couple of years while we've both been trading these. Lower day breaks don't break as fast or as cleanly. They tend to fight a little more before they die. So you have to wait them out a little bit longer, it feels like. And you probably need to be able to suffer through a bit more red on your P&L before it starts to work out. So I think a bigger stop and a bit more patience is probably what is required. But I'm telling you that based on like sort of instincts and not real information that I have.
Okay, so something to try.
Yeah,
maybe.
It would always surprise me because I always thought fear would be more powerful than greed. And so I always thought a lower day break, when it broke, you'd see people scrambling to get out and they'd break cleaner. But I don't know. It must be the hopeless gamblers in the market or something that, you know, they'll always fight to keep something alive before they admit like the game is up and it's not going to work out. But yes, no, why not? I mean,
Yeah.
All you have to do is flip around your trade book, right?
Yeah, that was literally what I was thinking. But if it's the same or similar, all of the same logic applying to the high of day break, or if I'm looking for 3 white candles with the stairs, in theory, should apply to a low of daybreak with maybe 3 red candles and stairs.
I'd try it. I know I preach a lot to like, I think it's better to stick to a single strategy, but I don't really think you're trading, if you trade high breaks and low breaks, it's sort of kind of, if you're applying the same trade book upside down, I think it's not exactly the same distraction as trading a whole other strategy, if that makes sense. You know what I mean?
Yeah, because I mean, I still can't see the zigzag for ABCD, but I can clearly see what a low is. And so if I just apply all of the same principles,
Yeah.
maybe it worked out.
Why not try it? Because it'll give you something to do. So, you know, you're not spending all day looking for 2 trades, and it'll keep you a little busier, and maybe you'll find the secret ingredient to making those things work out. And you can come back and tell me.
I'll let you know how that pans out.
Cool.
Thank you, sir.
All right, guys. If no one has anything else, I'm gonna shut the meeting down. Any last questions or comments? Alrighty. Sounds good. Next week, I think I want to get a little bit into maybe a little bit of some data evaluation. So I might be hitting some of you up to see if some people be willing to share, maybe digging into an element of their trade book using some of the data they've collected to try to get an insight into whether or not that should be part of your trade book or not, or how important it should be. It's kind of my idea for next week, but there'll be more to follow on that. I'll send something out. I'll send it out earlier so we have some time, because that might take some people some time to kind of dig into that who want to share. But thanks for tuning in, guys. I appreciate it, and we'll see you. I'll see you in the markets tomorrow, and we'll see you next week.
Thanks, John.
Thanks, John. Thanks, Steve.
everyone.
Thanks,
Have a
John.
good one, everybody.
Bye.
See ya. Thank you.